Good day, traders. Good day. I hope you all. I hope you're having a fantastic evening. In this video, I'm going to show you exactly how to trade synthetics. So, of course, as you may know, there's only one broker that really offers synthetic trading and synthetic pairs. It's Deriv. Deriv is a fantastic brokerage. They really offer the best spreads on these synthetic pairs. So, with that being the case, you're going to have to download Deriv and utilize it, and you'll also have to apply a lovely indicator that we're going to be find ourselves using over the course of the video to show you exactly how we trade. And I'm going to break down exactly how to do this in a simple manner, very easy to understand and easy to replicate within your own trading as well. In fact, if we do really well with this video, I might even decide to start up copy trading, where you're able to copy the exact trades that I take using this method. So I think there's a lot of possibility involved, but we'll see how it goes as time goes on. We are using number one deriv, and we are also using, and we also trading, the volatility indexes, the boom indexes, jump indexes, step in, or basically any single synthetic pair we may be able to trade using this method. The downside is that I will provide you with a list on how we can actually do this. The rest of the other pairs, I'm not entirely certain if they would end up being profitable, simply due to the fact of how this actually works. So it's all about market cycles. You know what? That's the general drift regarding the method that we will be using today. Market cycles, and over the course, as you may know, over the course of a certain period of days, you'll notice that the market goes through a certain cycle. So with currency pairs, it's mainly accumulation, manipulation, and distribution. With synthetic pairs, it's every single 8 days, it would respect the same level. And now you may be wondering, what do you mean by that? And this is where I'm going to go ahead. I'm going to show you using volatility 25 index, not the 1 second normal index, and I'll show you exactly what I mean by this. So as you can see, today's date, it is the 30th of July. Yesterday's date was the 29th of July. I'm going to show you today's trade and yesterday's trade as well. So having a look at the 29th of July. On the 29th of July, what actually occurred? So we had a lovely run towards the upside after 10 a.m. So after 10 a.m. we had a nice small run down, and then we had a lovely long massive move all the way up towards the upside. That's alright. That's okay. That's good. And I'll just be focusing on yesterday's price action. It'd be amazing if I can actually get a lovely MT5, a nice MT5, you know what, bar replay. I think that would be awesome if I can just get it. I think I should, as a matter of fact. But looking at this, I'm focusing on yesterday's price action. Why? Because I want to see where is the market moving in this short period of time from midnight towards 10 a.m. As you can see, we are clearly in a lovely downtrend, creating lower lows and lower highs. So that's just basic knowledge. Don't fret if you're not too familiar with it. I'll show you exactly what I mean by this. So as you can see, I will draw my trend line. Now, of course, I don't like using these types of tools. You can draw support and resistance, supply and demand all over the chart. You can draw trend lines all over the chart by any trending market, and especially with synthetic markets, these markets, you know what, these pairs love to trend. They love to trend. But the question is, when and why do we draw it at this particular time, from midnight towards 10 a.m.? We look for our positions thereafter. We look for our positions after 10 a.m. in the morning. South African time, which is UTC +2. With that being the case, I want to go 8 days prior to today. Now remember, on my chart I have a pivot point indicator. The blue line is the pivot, as you can see over there. I'll show you where to download this as well at the end of the video. The green line is the support level 1. Here's the other green line, is also support level 1 and or support level 2, my apologies. The red line is resistance level 1, and the line on top is resistance level 2, and the line right at the top is resistance level 3. We might even have R4, and as you can see, as we go down, we have S2, S3 and S4. These aren't phones, these are support levels indicated by the pivot point indicator. So what exactly is a pivot point indicator? So in a nutshell, it's basically the high and the low of the previous day multiplied by 2 and divided multiplied by 2, added together and divided by 2. That's the high and the low of the previous day added together and divided by 2. So if you were to draw a line on the high and the low on the previous day, as I'm going to do right now, you will realize that the following day, the pivot point the pivot point for the following day was in and around the midpoint of the high and the low. As you can see, as there's my red line right over there, my red dashed line. That's your pivot point for the 29th of July. It was in between the high and the low of the 28th of July. Hope that makes sense. So that's done. So it's all a mathematical equation, it's all a mathematical calculation on these levels, and as a result you're able to apply a structured approach to trading. And this can be done on synthetics, it can be done on gold, it can be done on commodities, on currencies, on stock indexes, on stock indices, on stocks. It doesn't matter, it applies regardless. It's all a mathematical calculation. Right, so with that out of the way, that's awesome. I'm going to delete all my arrows or my lines in the chart, and I'm now going to go into the meat of today's video. So let's go 8 days prior to the 29th of July. So as you can see, it's the 29th. I'm going to go 8 days, that's obviously the 21st of July. And going back a few days, I think it's the 21st, correct. I am now going to draw my lines. And I want to make mention to you all that this method is extremely powerful. This method is probably one of the best methods around. Okay, well look, every single forex provider says that, every single forex mentor says that, but I think where I have my edge is the fact that this method can be applied regardless of your understanding of it. It's so simple, it really is. So I'm applying lines on the chart. These lines are the exact same lines of the pivot point, the support level 1, resistance level 1, resistance level 2, and my resistance level 3, and maybe even number 4. I think I'll add in all of those as well. I'm going to what I am doing, I am drawing a line on my chart that is the exact same line as my levels on the chart on my S1 to S4, R1 to R4, and my pivot point on 8 days prior to the day that I'm trading. 8 days prior to the day that I'm trading. Why is this important? Because the market cycle of majority of synthetic pairs tend to be within 8 days. That's the market cycle. So let's go ahead and let's have a look and see what these lines represent. Now, a word of caution. There are times where you have to use the following day's levels as well. Sometimes it can be 8 to 7 days. It can also be a day before that as well. I will go into the meat and I'll go into the semantics, the smaller details, the finer details as well so you have a crystal clear understanding of how exactly you need to use the method. As you can see, in between these red lines, you're seeing a few green lines here of the following day. These are the support levels of the following day. These can also be used as a confluence to your trading on that particular day of trading. So let's go ahead all the way to our lovely level over here. And these dashed lines are the lines that you saw on the previous day. Note, on the previous day, or not the previous day, but on the 8-day cycle that you saw. The exact same lines. So what does that mean to you? It means that when price is going to break the structure, you want it to be bouncing off a level that was created a few days prior. Not just that, but it has to run through a level. After bouncing off a level, it has to run through a level. I hope that makes sense. So as you can see over here, this is our area that we are playing in between. We are bouncing between this resistance level over there and the support level over here. It's not perfect. That's okay, and that's how you have it, your trend line. This provides more clarity on when can we see a strong run to the upside and how can we catch that strong run. That's what you want at the end of the day. So how do you do that? Of course, you have your lovely trend line. This helps you determine when are we going to have a structural shift. Remember, a break in a trend line is also known as a break of structure. If you know, or if you've been trading for a few years, you're very well aware of a change in market structure. You're very well aware of all the basic knowledge that was taught not too long ago, at least around 5 years ago, where that was how majority of traders used to trade. But without further ado, you know what, regardless of that, it doesn't really matter about that. I'm going to go back 8 days. I want to first remove all my lines that are not applicable. These levels here are not applicable. Your targets are at your existing or your current day's levels of support and resistance. Those are your targets. You don't target anything else 8 days prior or any other levels in recent history. You only focus on today's level, and that's exactly what you'll be doing. So your opportunity will normally occur in and around 10 a.m. Normally around 10 till 3. You don't want to find yourself trading thereafter. If the opportunity is not clear, don't take the trade. That's a rule. If your opportunity is not clear, do not take the trade. So looking at this, these are the levels you're playing in between. If we go on the following day, you only see this over there, and you only see this over here, which aren't really the best. I'll be honest with you, they're not the best. You want something a bit better than that, but it is what it is. I do believe there was a level prior to this. I can tell you that for a fact, but unfortunately history is not allowing us to see what pivot point level there was prior. But as you can see over here, you can see your two lines there, your lines over there, and this line is lining up exactly with the current day's pivot point, as you can see right over there. That blue line, that's the 29th of July's pivot point, and yeah, we can see we're approaching it, and the moment we closed above that level, we immediately had that enormous bullish run all the way up to resistance level 1, which would have been, you would take profit in that regard. So as you can see, we had quite a nice run over here all the way up, which was quite fantastic, and your entry in this regard would have been the break of this trend line, indicating that we have now shifted structure to a bullish market. We're no longer bearish, and your stop loss would have been at the low that was created. So this was the low. It was around 17,000, let's say 8,000 or 18,000 points. Your take profit would have been 32,000 points in and around this resistance level 1. As you can see, we had a immediate run all the way up to the upside and a clean opportunity that occurred over the course of the 29th of July. So that was that. I did take some time to explain, but I'll go through the topics once again. What occurred was, we're looking at 8 days prior to the current day's trading, 8 days prior to that, to the current day's trading. You're going to then not box out, but you're going to place a horizontal line on all of the levels created by the pivot point indicator, which you can do yourself if you were to manually do the calculation, but that would take too long. You would do that, and then you would patiently wait until 10 a.m. in the morning to see what's the overall market structure over the course of the morning session from midnight towards 10 a.m. So that's South African Standard Time. When that is the case, when you find out, okay, we may be a bit bullish, we could see a potential reversal, we could see a potential break of structure, change of market structure. When you see that, that is when you obviously going to find yourself getting interested in this, because of course we should be bouncing off a previous level created 8 days ago. If we are, then we can find a lovely entry and see ourselves running the targets that is relevant to the existing day's pivot point levels. So I hope I haven't lost you yet, but in that regard, that's exactly what we're going to find ourselves doing. So let's have a look. Today is the 30th of July. I will go to the 22nd of July, and I am now going to place my levels on the chart. Right over there, right over there, right over there. I'll place one there, I'll place one prior as well. I'll do all of these, and I think about just about there. As you can see, current price is currently over here, so I think that's about a good level I can place. I might even decide to do that. I don't think that's necessary though, but I think these ones, it might just be. So anyways, that's where I'm playing in between. And as you can see, we bounced off this level. So what are you going to do? Can clearly see we're tapping a level. What I want to do is I want to draw a trend line. I can draw it like this. It depends. So it's very clean, in my opinion. I think this is actually cleaner. Far cleaner, actually. Yeah, there we go. First, second touch, third touch, break, pivot point. There's no level lining up really with this pivot point level, but that's okay. And you're going to place a lovely short, so that you can see a price running all the way down into support level 1, or perhaps into support level 2, although arguably support level 2 is rather quite far, but you could just place your stop loss at break even and run a risk-free trade all the way down to support level 2. That can certainly work. That can definitely work. So your entry would have been on the break of the pivot point, or it could have been on the break of the trend line. It all depends on how you feel with regard to that. If you were thinking to yourself, I want price to break the structural level over here. From there, we can see it onto the downside. And that's exactly what occurred. So that's one way. Obviously, this position is still very much open for you to take, even as we speak. Your stop loss would normally be above this high, but depending on where you entered in your position, you'd have to place it above this high. So of course, you want to have a decent risk to reward. That's around 13,000 pips. Your take profit would normally be around a 2 to 1. That's around so around support level 1 of the previous day. that can be where we can see a price heading in towards. But ideally, I'd like it to, if you are going to be in between a support level 1 and 2 of the current day, ideally you want to have it at least by the low created by this start of the trend line, at least there, to follow this move to the downside. But okay, that is that method. Beautiful method. It might sound complicated in the beginning, but once you understand it, it's one of the easiest methods you can actually apply trading synthetics. It's a beautiful method, absolutely. But okay, I'll delete all selected. I might show you a different perhaps type of method. This one is rather interesting. I think by now you can already see, okay, what I'm looking at. Hopefully we can see a nice run towards the upside and take it from there. But alright, and yeah, most definitely. I can even see that tomorrow's trade is already showing up. We can continuously have a higher high being created. You can see we can potentially have a nice sell opportunity occur over the course of Wednesday to continue in the overall direction of the trend. And that's a beautiful method. It's honestly quite fantastic. But okay, I think that's where I'll leave it for today. Okay, with two examples on two different asset pairs, and the one is currently still running, and the other one, of course, it's take profit quite early. You know what? Immediately after we closed above that pivot point level on volatility 25, we certainly had a beautiful run all the way up. Totally fantastic. But okay, that is that for today's video. I hope you enjoyed it. Stay tuned for many more videos like these coming up. I love synthetics, a lovely asset pair to be trading. And aside from that, I hope you all keep well, keep safe, and I'll catch you in the next one. Cheers.